All right, welcome to episode 10 of Nerd Stock Talk. And you can catch us, as we say every week, 7 p.m. Sundays. We say it every week.
Every single week.
Yeah, it's always 7 p.m.
Never
on
changed.
Sundays.
Never
changed. So if you tuned in at any other time, nope, it's always been 7 p.m. on Sundays.
Yeah, it might have been a little different from daylight savings time, so maybe that was.
Yeah, it kind of threw us a bit, with daylight savings time. But yeah. So what is it? Welcome, and I got with us our co-host here, JP. Oh, I got to put up to show the display names. There we go. JP Easy Money Wildman. All right. So we got a full episode all set up for this compact 30 minutes. So we're going to do our last week picks. We're going to do our topic. JP is going to tell us all about puts. So I'm excited about this because I've always wanted to learn more about puts, and JP is the resident puts expert. And then we're going to talk about what our picks for next week are. So we're going to jump right into our last week picks. All right. It was kind of we were almost fairly even because, as I said, we go by percentages because we know if we go by dollar amounts, it kind of skews, it throws stuff off. But I got to say, how are things looking for, once again, I think it's looking a bit better based off of what I have. So JP, we'll talk about your long picks.
It has not been a good couple of weeks.
But you still have your 1 month on there on Canoo. You're still.
I am long on Canoo. Yeah.
Okay. That's your go big or go home. That's your ride or die, as they say.
Ride or die. Yeah.
All right. And so talk to us a bit about your last week picks here. Those are your three that you've just been really looking at for a while too.
Yeah. So my strategy has sort of changed a little bit. So I'm collecting stocks in blocks of 100. Northern Dynasty, Ferroglobe, and Sundial are very inexpensive stocks that also have very, very high implied volatility, right, which means there's a lot of money to be made in options. So what I've been doing is consolidating all my positions into these 4 stocks and selling options, which has really done very well because I'm still making money on these stocks even though they're down.
And you talked to us about options, and I still have to figure out how to do that. That seems like you're talking about it's like a best. I mean, we did it off the air. You said, all right, and then I pulled up one of these penny stocks that you're basically talking about. Like I think Northern Dynasty is at about 80 cents a share or something like that, or
61 cents now.
61 cents.
It was 80 cents when we were talking about it.
Yeah. And you're selling me. And I actually asked you, I said, okay, tell me what to do. And I still couldn't figure it out. And you walked me through exactly what to do. And I still couldn't figure it out. But Ferroglobe is doing well. Sundial seems to be, not only is it a penny stock, but it's also one of these meme stocks as well, correct?
Yes, which makes selling options on it very lucrative. What I've really been doing is I've been watching the Reddit forums and some of the other internet forums like Wall Street Bets and things like that to find these inexpensive stocks that people are hyping about, and then I'm buying them not because I think they're gonna moon, but because I think a lot of people are gonna start buying options on them, and the stock is not gonna go anywhere, and I'll make some money on these options. So I'm sort of playing the other side of the coin here, and it's working out well.
Okay.
I got a little tired of being on the front side of the transaction, losing money on these options.
Good. All right. So yeah, and so let me just pull up what I did as well. So I did Tencent, as I say, this is still my ride or die. I've it's a Chinese gaming company, mobile gaming company. It's been fairly volatile the last 3 months, but it still has a pretty good long-term trajectory on it. And last week, I told you I was going to look at Lowe's. Lowe's went up 6%. So it's been doing really well. And
6.66%.
Yeah, I think it might have been 6.67. So yeah.
Wow.
Yeah, it went up. So it went up.
It's
So
up. Up is up. Up is up. Even if it is a little evil.
Yeah. So, before we jump into our main topic, I want you to talk to us briefly about what you think is going to be happening with, as you mentioned, with the hedge funds. What's happening in the upcoming week?
So there is a rule change coming in the specific rule I cannot recall right now, which is unfortunate. But there's a rule change coming. Basically, hedge fund market makers, etc., are required to hold X amount of liquidity in order to trade options or stocks, just like your own personal account.
Right.
You get too far into options, you have to have a certain amount of credit, you have to have a certain amount of cash on hand in order to trade those options, and that calculation changes based on what those options are worth or how much the underlying shares are worth. So when the pandemic hit, in order to prevent the stock market from collapsing and bringing the entire financial system down with it,
right,
what happened was the SEC suspended this rule, and they basically made the stock market a casino free for all, and it kind of opened hedge funds up to be able to short their entire portfolios. This was a rule that went into place after the crash of 2008, to sort of keep things from crashing again. Like I said, it was suspended just after the pandemic. Now it's being reinstated. It was suspended for a year, and it's now being reinstated. Couple that with what we know is going on with GameStop, which is still has an enormous amount of short interest, and that sort of investing philosophy has been ballooning out across some other stocks too. Sundial, we just talked about, AMC. There's a handful, I believe Tencent might even be on that list too, of stocks that are shorted beyond the available float. So there are more shares being shorted than are actually available. The only way that happens is by naked shorting, which means that you're shorting the shares, selling puts on those shares or buying puts on those shares, and you don't own them. So what that does is that opens you up to infinite risk. Okay, so you can afford to do that if there's no requirement that you have liquidity. Now that there's a requirement that you have liquidity, what we're seeing, and I think this is what explains some of the bleeding in the stock market of the last couple of weeks, and I think there's probably another week to go, is that a lot of these hedge funds, there's a couple of hedge funds that over the weekend it just came out, are actually being liquidated. I think we're going to see some more, and I think it's gonna drag a lot of these large cap stocks and a lot of your really solid investments, your safe investments, so to speak, your Microsofts and your Disneys and stocks like that. You're going to start to see those get dragged down as these hedge funds are rebalancing their portfolios and liquidating some of their more solid performers in order to cover these margin calls that they're getting.
Okay. So in a way, this is like, it's kind of a good thing what we're seeing in a way, because it's putting the reins back on the hedge funds, and it shows that the markets are looking at more of a post-pandemic stock market right now. If they're putting these things back in place, as you said, they took the reins off to kind of help prevent the stock market crashing and bottoming out, which started to happen last March.
Right.
So, and then we saw that it
really did bottom out last March. I mean, the lifting of this margin requirement is really what is behind the astronomical climb that the market has been seeing over the last year. I mean, it's really just been a straight linear line up.
Right.
And it's unprecedented, and the only reason for it is the relaxing of these rules. Yeah. So we're seeing this correction sort of bring this back down into line. And I bet if you zoom out on the S&P 500 and the NASDAQ exchange, I bet you're going to see that trend line sort of average out, and wherever we land after the end of this, mid-April or so, is going to be right on course with the last 3-year trend line.
So basically what this did, taking this off, is that you saw some stocks being significantly overvalued.
Way overvalued. Yeah.
And then some stocks were being significantly undervalued because they were being shorted.
Right.
So this is going to try to even everything back out with this rule. So, quick tip for everybody listening and watching, that we're going to see some evening out probably of the stock market in the next couple months. Then
volatility is going to be huge. There's going to be some yo-yos for sure.
And even for the more stable stocks, they're going to see some volatility on, and we'll talk about it at our end when we look at what we're doing. So what we're going to do now, we're going to jump into our topic, our tonight's topic. So tonight's topic, JP, when we talked over during the week, I said, and you said, listen, I really want to tell people about puts. So talk to us about puts. What are puts? And how can we make money on this? So teach us how to make money.
So there are two things you can use a put for. Number one is making money, which is what the hedge funds are doing with stocks like GameStop and AMC, and essentially what it is you are borrowing those shares, and you're going to sell them later, or you're going to sell the shares now and borrow them in order to buy them later at a lower price. Okay, so when you're shorting a stock like GameStop, it's say it's $250 a share right now. I don't know what it is. It could be $250. Who knows? If I'm going to sell a put on GameStop, what I'm saying is I'm going to sell it, say, for $249 and next Friday, and I'm going to buy it next Friday at whatever price it is, and in the hope that it's a lot lower than that, and I get to keep the difference. The person that buys that put is now obligated to buy GameStop at whatever price it is. And this is what got the hedge funds into some trouble, because they didn't own the shares and they weren't even required to have the money to buy the shares. So when you own a put on GameStop, or you sell a put on GameStop for $249 and the share goes up to $350 or $400, you have lost a lot of money, because you then have to go to the market, buy those shares at that price, and then turn around and sell them for a loss. And that's what caused the short squeeze, and that's what got all these hedge funds into some trouble. However, there's another use for a put, and that is if you have identified a stock that you would like to own, you can sell a put on that stock and pretty much lock in the price you're going to pay. So for instance, if I can screen share here, I'm going to show you guys Northern Dynasty Minerals. We're going to go to trade options, and this is the option chain. And you can see here the price of Northern Dynasty right now is 61 cents. Now, why did I pick Northern Dynasty? Because it's 61 cents. Options are traded in blocks of 100. So you have to buy 100 shares or sell 100 shares at a time. So here's the option chain for Northern Dynasty Minerals. And you'll see that the price is 61 cents. And the reason I chose Northern Dynasty is because the price is 61 cents. Options are traded in blocks of 100. So when you choose a share that's 61 cents, you can buy a lot or sell a lot of options. Now, right here, you can see I have sold a put already for Northern Dynasty at 50 cents. For that, I received $17. There we go. Hang on, let me undo this. Sell put, sorry, 4 cents. So I will get paid $4 for selling this put. That means I am obligated, if Northern Dynasty goes below 50 cents, to buy it. I'm okay with that. If it goes to 45 cents, I'm okay with that. I know it'll come back up. Conversely, you could sell a $1 put, which means you are locking yourself into paying more than it's worth, but you're going to get paid $38 for doing that. So take that 38 cents off the $1, that puts you 62 cents. You're not really paying much more than it's already worth. Now, once I own those shares, I can continue to sell calls on those shares and bring my cost even lower. So this sort of works out. My average cost on Northern Dynasty right now is about 22 cents, just by selling options on these same shares that I own. So if there's a stock out there that you're thinking of buying, and you can afford to buy 100 shares, which is really what you should be gunning for in order to open up this farming, I like to call it. It's sort of milking all of your equity for all it's worth. There's no reason not to be selling options on shares you own. So if you wanted to buy Northern Dynasties at
so Kyle just said that's what I'm doing right now, selling calls on NAK.
What's that?
Kyle just said that's what I'm doing right now, selling calls.
Nice.
Yeah.
So I own, I think, 600 shares of NAC, and that's what I've been doing. And as I get called, if they get called away, if I sell a call, $1 call, make $3. Okay, cool. But if I do that times 6, that's 18. That's week after week after week. It starts to add up, and pretty soon you own those shares for free. So that's how you want to use puts. Now, if you own a stock that is possibly going to tank, you could sell a put on that as well. If you want to, take for instance, Josh, your Microsoft, I think you were saying you were thinking about getting out of.
Right.
You could sell a put that's maybe 5% over your cost, just one level above your cost. And you can guarantee yourself that you're not going to, or buy a put, I'm sorry. Buying is selling the shares. Selling a put is buying the shares. It's inverse, which is really confusing sometimes.
Yeah.
But if you want to guarantee that you'll be able to hedge your bet and not lose money on Microsoft, say it's $100 right now, or you bought it for $100, it's $110 right now. You could buy a put on that for $105. You'll spend a little bit of money, but you'll be guaranteeing that you'll lock in your gains. And if it goes below that, you'll make even more money. So that's what you that's how you use puts.
I mean, things that you would do is if you had stock in something that that's going to be going down, then you would sell a put, buy a put on that instead of selling the stock.
Yep.
Okay. And if you buy a put on that, does that mean you will lose your stock anyway, or
no?
Okay. So say for instance, I have 10 shares of Microsoft. And I know it's going to be going down. And Kyle just commented a comment. Mike spent what seemed like an hour explaining this, and it's getting into my thick skull. So I should buy a put on that, and I will still.
Yeah, but if you only own 10 shares, the first thing you're going to need to do is buy 90 more shares.
Yeah, I know. They're so expensive. Yeah, I can't. Yeah. So this is only for the penny stocks you can really deep dive into and have a really good time with a put.
Yeah, or if you have, really deep pockets.
Yeah.
I mean, if you look at the options chains on something like Apple computers, an option on a share of Apple is like $23, so you sell a put contract on Apple and it's going to bring you $2,300. And that's where the real money is to be made. That's what these hedge funds are doing. And that's how they're making billions of dollars a year.
All right, so we're gonna jump right into our pick of the weeks for next
Hold
week's
on,
week.
there was
Oh.
one more thing I wanted to add about puts.
Oh, for puts. Okay. All right.
Is that when you sell a put, it's going to show up in your account as a negative. So if you sell a put and get paid $50, it's going to show up as negative $50, and it's going to look like a loss to you on your balance sheet on your account. As you get closer to expiration date, that negative 50, if things are going your way, is going to move closer to zero.
Okay.
And then you'll have, if you got paid $50, it expires at zero, you'll have made $50. If it goes the other way, it might go up and you'll start losing money. But here's the thing with a put is you don't have to wait till expiration. So let's say you get paid $50 for that put and it goes to 25, you're halfway to the expiration date and it's now $25. You can buy that back for $25, close the position. You would be closing it out and you'd make that $25, a 50% gain. So especially, NAC isn't a super lucrative stock to be selling options on. It's not all that volatile, but it's a great stock to begin on because the risk is so low. So as a stock to sort of learn the ropes, it's a great one to choose. There is some risk. You might lose $20-$30 or something, but all in all, not a big deal. You can spend more than that on a crash course to learn about options and still not know what you're doing. So
for all of our video game friends out there or anything, if you want to learn about puts, the tutorial, the starting zone would be, as you said, that Northern Dynasty.
Yeah, or a sub $1 stock. Yeah.
Under $1 stock. Okay. All right. Yeah. That's good. That's good advice. Okay. So starting zone tutorial, starting zones. If you're, starting to swing your axe or you learn your magic spells and you want to learn about puts, then that would be thing. Find a stock that's under $1. So, and try that out. Okay, good. All right. And so what we're going to do now, we're going to jump right into our last segment. All right, so what are we looking at for next week? So I am going to be watching Disney. I always like to pick the ones that are, and based solely off of what you said at the top of the show, is that we're going to start seeing some of these stocks, some of these big blue chip stocks are going to be going down up until or around the first week of April, correct?
Yes. I mean, there is the larger, nobody knows how deep this issue is going or how deep these hedge funds and banks have gotten themselves into this position. I don't think it was expected that the SEC would reinstate this rule with a 30-day notice like they did. So, there could be some more bleed all the way up through next April, and there could be larger reverberations through the market. We'll see, I guess.
Yeah, you mean not through next April? That's like not for a whole year.
Through this April.
For this April. Okay. All right. And as I say, but I mean, Disney stock right now, I think is at 188 a share. It's not overvalued. 188 is pretty straight, mark on. If you think about Netflix is over $500 a share. So, and Disney is so
they have a lot more shares out there though. I would argue with you.
Yeah. Okay.
There's an argument to be made, and it'd be a constructive argument. Yeah.
Okay. All right. But it's got to, yeah. Okay. It depends on how many shares are out there. But I don't think Disney's ever split. Have they ever split their shares before?
Oh, I'm sure. Yeah.
Have they? Okay. All right. I should pull up to look at what the 5-year yield, how it's been the last 5 years.
Yeah. My guess is there's a lot more shares of Disney out there than there are shares
in Netflix. Yeah. Yeah.
Disney's a much more valuable company. There's no doubt. But it's just to spread out a little further.
Yeah. And so, but I'm looking at, and I'm watching Disney for the opposite reason of why we watched stocks in the past. I'm going to watch this go down. I want to see it go down because I want to buy some more shares in Disney because I think it's a really good long-term investment. And
it's really rule number one of Nerd Stock Talk is buy the dip.
Buy the dip. We've always say buy the dip and buy the stocks of the things you know about. Buy, learn about your passions, and whatever you're passionate about, learn about.
Your passion is Disney princesses, and that's
and Marvel superheroes. You can't get any more than.
Oh, is it the superheroes? I guess I always thought it was the princesses
and the Star Wars. It's all. See, I mean, anybody who has Darth Vader, Iron Man and Elsa and Anna cannot be.
You can't lose.
You cannot lose them. So that's when I'm buying the dip. I want to see Disney. I want to see Disney go down. I'm really excited about that. So then I can buy more shares in Disney. I want to lower my cost per shares on that. So, and once again, you are looking at Ferroglobe and Sundial, right?
Yeah, so Ferroglobe, I literally 5 minutes before we went live today, I got a notification that Ferroglobe is locking up some shares. I, at this point, don't even know what that means. I haven't had a chance to read the article. This could go either way. Locking up shares seems to indicate that there'll be less shares out there. So hopefully it means it's going up. But I don't know what's going to happen. Either way, I've got both puts and calls out on Ferroglobe, so I'm going to be making money one way or another. I hope. And Sundial's an interesting story because it was really it's a cannabis stock. They're a Canadian company, and it was a crap stock, and it was something that Reddit and some of the other internet forums really latched a hold of, and it was being shorted to no end, and it squoze, and it went up to from 50 cents up to like $5, right. And it sort of settled down around the $1, $1.50 mark. And however, through this squeeze, Sundial in some really genius business strategy, they were able to issue some more shares at the top and raise a bunch of capital. And when they did that, they were able to pay off all their debt, and now they're sitting on $600 million in cash that they are planning to use for some acquisitions. So this really could be the turnaround story of the century here, in Sundial using its meme status to its advantage. So we'll see what happens there. They're saying in the next 6 weeks they're going to be announcing some big acquisition news. So
wow, okay, cool. Wow, okay, that's good stuff. So we'll see what happens next week. And remember, everybody, is like as we always say, 7 p.m. Eastern Standard Time every Sunday. Every Sunday night, 7 p.m. Come here. If you have some questions, make some comments. Thanks again, Kyle, for bringing up some questions. And so, as we said, Kyle is saying he's doing what you're doing. He's selling calls. So that's what he's doing there. So yeah. Once again, thank you very much, everybody. This has been another episode of Nerd Stock Talk, and we will see you.
Riveting episode.
Yes. Riveting. It's been a riveting episode. Yes. All right. Thank you very much, everybody. And thanks a lot, JP, for that good advice. So.